All right, so EVgo just dropped their third quarter 2025 earnings. And honestly, the company is at a really fascinating crossroads. In this breakdown, we're going to dig in and figure out if this quarter is the real deal, a true turning point for the business.
I mean, they delivered some seriously strong results here. Results that just blew past what analysts were expecting. But for a stock that's been getting hammered, the big question on everyone's mind is this just one good quarter, or is this the start of a real sustainable comeback?
Okay, so let's get into it. On the one hand, you look at the operational numbers from their call on November 10th, and they paint a really positive picture. But then you look at the stock chart, and, well, it tells a totally different story. So what we're going to do today is unpack that disconnect between their solid performance and Wall Street's skeptical perception.
All right, first things first, let's hit those headline numbers. These are the figures that really made everyone sit up and take notice right before the market opened.
So the biggest shocker? Definitely the bottom line. Wall Street was penciling in a loss of 16 cents a share. EVgo came in and just absolutely crushed that, reporting a loss of only 9 cents.
And that 7-cent beat, that's a huge signal to the market. It's basically saying, hey, our business is running way more efficiently than any of you guys thought.
And it wasn't just the bottom line. The top line was just as strong. We're talking $92.3 million in revenue. That's not just a beat. That's up a whopping 37% from this time last year. So yeah, a really solid showing all around, top to bottom.
So you see those great headlines, and the next question is pretty obvious, right? What's actually driving all this? Let's peel back the layers and look inside the numbers.
Well, it starts with the absolute core of their business, charging revenue. It hit a brand new record, $55.8 million. That's a 33% jump from last year. Plain and simple, it means more people are plugging into their chargers and paying for it.
And that revenue is coming from a massive increase in actual usage. Their network throughput, which is just a fancy way of saying how much electricity they sold, shot up by 25% to 95 gigawatt hours. This is key because it shows people aren't just signing up, they're actively using the service.
And of course, all this is happening because they're building out their physical network. The number of charging stalls they have in operation, also up 25%. They're getting close to 4,600 now. It's that classic flywheel effect they're aiming for, right? More stalls means more users, which means more revenue.
Okay, so the momentum is clearly there. The numbers look good. But what's the game plan now? How does management plan to turn this one great quarter into a long-term winning streak?
Well, if you listen to the CEO, Badar Khan, the message was crystal clear. It's all about one thing, profitability. He basically put a stake in the ground and said they expect to hit break-even on an adjusted EBITDA basis in the fourth quarter. That's not some 5-year plan. That's what they're aiming for next quarter.
And their official guidance, it totally supports this. Their baseline forecast gets them right to the edge of break-even for the full year. But check out that upside column. They've got a potential contract payment that, if it comes through, could flip them to being solidly profitable, maybe even up to $23 million.
So how do they actually get there? Well, it's a few key things. They're trying to scale the business smarter to get better margins. They locked in financing so they don't have to sell more stock. A really big one, they're adding NACS connectors to get all those Tesla drivers on board. And they're doing all this while trying to be really careful with their spending.
And this is where we get to the real dilemma for anyone looking at EVgo right now. You've got this great story playing out in the business, but then you look at the stock price and it's just ugly.
You can really see the tug of war here. The bulls are looking at the fundamentals, record revenue, better margins, a clear path to break even, and they've got money in the bank. But the bears? They're pointing at the cash they're still burning through, the risk that they might not pull it off, all the uncertainty in the EV market, and, well, that brutal 37% drop in the stock.
Then this chart really just drives the point home. The rest of the clean energy world has been on a tear, up 45%. EVgo, down 37%. It's like the market is just screaming, we don't believe you yet. Prove it.
So where do we go from here? Obviously, all eyes are on that Q4 report. So here's our take on what to expect for the next call.
First, we think they're going to do it. They will hit that crucial adjusted EBITDA break-even target. That should give the stock a nice little pop for sure. But let's be real. One good quarter doesn't erase a year of bad performance. The street is going to need to see them do it again and again. Which leads us to our final rating, market perform. The thesis here is pretty simple.
The turnaround story is getting stronger. You can't deny it. They're making the right moves. But until they can prove this wasn't a fluke, that execution risk is going to keep the stock in what we'd call the penalty box for now.
Now, if you're someone who believes in the long-term story, but you're worried about all the short-term choppiness, here's a plausible trade idea. You could look at some long-dated call options. It's a way to get exposure to that potential turnaround story a few years out while clearly defining exactly how much you're willing to risk today. Kind of a way to play the long game without getting burned by the day-to-day noise.
And as always, we have to say it. This is not financial advice. This is just our analysis for informational purposes. You absolutely need to do your own homework.
So, at the end of the day, that really is the billion-dollar question, isn't it? EVgo is doing what they said they would do. They're executing their plan. The only question left is, when will the market finally start to believe it? The answer to that is going to write the next chapter for this company.